Well, good morning, traders. And really, the market is getting into that business end of the week, and really going to be focusing on this US June CPI print tonight. The Fed obviously look at core PCE, which is a slightly different calculation, slightly different inputs that go into that inflation basket. But the market's become much more sensitive to this core CPI numbers, which come out at 10:30. Now, Janet Yellen, in her testimony to Congress or to the Senate Banking Committee last night, has made mention about low inflation and looking at inflationary trends. She's kind of guarded the market into really focusing on this number tonight, and the market goes into expecting 1.7%. The analysts range anywhere between 1.7 and 1.8, so it's a tightly held range. If we get 1.6% or below, that will be the fourth reading in a row that we've seen that missing to the downside. Now, that will have big implications for the Federal Reserve. We've seen people like Patrick Harker at the Philadelphia Fed, a well-known hawk and a voter, changing his tune from a December rate hike to one where he's looking for more information before he can commit to that call. People like Lael Brainard talking about the neutral Fed rates being only one rate hike away, and that could come any time in December or going into Q1. But the market is now very much of a 50-50 belief that we get a December rate hike. I do think if we get a 1.6% print or below, obviously the dollar's going to get hit pretty hard. You're going to see some good buying in real yields. They're going to come down quite sharply. I'd imagine somewhere between 5 to 10 basis points on the 10-year. I think obviously gold is going to rally quite nicely in that scenario as a second derivative of those trades. But the market has been guarded into this, and while implied volatility is not exceptionally high over this event, I do think this is the must-watch event now of the week, and I think there's going to be a lot of focus. Things like tech stocks, if we do see a weak print coming through, they could find some good buying under the idea that we do see a slight flattening of the curve, and the bank and tech stocks, which of course take their cues from the risk-free rate being discounted as part of the calculation for net present value. Tech stocks could do very nicely in that scenario. On the other side of things, of course, if we do see stability in that inflation read, and perhaps even 1.8%, which is a bit of a tick up from the prior read, that could be good for the US dollar and shed some light back into that. One pair we're watching very closely, of course, is the Australian dollar against the greenback. I mean, the Aussie dollar on a trade-weighted basis has started pushing up again. Aussie yen looks quite attractive at the moment. That's been trending quite nicely. We've actually seen Euro Aussie under pressure, as has Sterling Aussie coming under a bit of pressure. So the idea that in this idea of a slight concern about whether the Fed are going to be more aggressive going forward, the US dollar weakness we've been seeing, we have seen that emerging market complex outperforming again. Of course, the Aussie dollar is that G10 proxy of all things emerging markets, so that's working out quite nicely. You've obviously seen positively trending equity markets amid very, very low implied volatility, which of course then throws us into wanting to be paid to be in positions, and that means the carry trade comes into its own. So people have looked very closely at spread differentials in the bond market, both on a nominal and real basis, and can see the Australian dollar looking quite attractive in that situation. So Aussie dollar has closed above the 2016 downtrend at 77.20. A weak CPI number, and we go up to 78 cents in that situation. We then start talking about the 2016 highs around 78.35. A break of that, and we're talking 80 cents. So the US dollar's out of favour at the moment. The contrarians will say this is a great time to start thinking about US dollar long positions. That may be so, but the Fed do need to see inflation turn before we can start with buying US dollars again with any kind of conviction. So watching Aussie dollar against the greenback, a strong CPI number, we can start thinking about really fading this currency now and start seeing better downside. Dollar yen's probably a preferred way of playing the CPI print, but certainly if we get a weak number, and that holds a lot of concerns for people who are short Aussie dollar, and ultimately until the RBA start talking down the currency, and that not just means talking down the currency, but also removing and going to a easing bias of which the market needs to then subsequently buy into the belief that they are going to cut rates. But that will only happen if the RBA genuinely believe that the high Australian dollar is going to impact materially their inflation estimates going forward. So that's something that we need to do. With a neutral stance that the RBA currently have, and ever widening yield differentials between Australia and the US, we are concerned that perhaps the Australian dollar does go higher in that situation. Carry trade is really the driver of the Aussie dollar at the moment. In terms of our market today, well, clearly, we've got a flat open. BHP's ADR is down 1 cent, so no real move there. We've got got iron ore spot doing very nicely indeed. Iron ore futures perhaps lagging a little bit there, but the spot price, it's not often you see spot price more volatile than the futures price, but that's a nice gain there. Nice gain in oil as well. That should help BHP a little bit there. So flat open for the market, but will we see the buyers step in? Yesterday's momentum was really interesting. Banks working quite nicely. Healthcare coming back in, finding a bit of its mojo. Not much to drive intraday. It's about pre-positioning your portfolio. Have a look at the risk ahead of that CPI number. Work out the exposures you've got, and what potentially could happen with the different permutations of moves, and get back there. So, any questions? Reach out to your account manager. But certainly, a fairly flat day expected. All eyes on that CPI print, as I say.